Bitcoin just got hit with another geopolitical shock. President Trump says the United States will probably take control of the Strait of Hormuz and should be compensated for protecting one of the most important oil routes in the world. And if you own Bitcoin, this is not just a Middle East story. This is a crypto market story. Here is why. The Strait of Hormuz is one of the most important choke points on the planet. Roughly 1/5 of the world's oil supply moves through that region every day. So when Trump says the United States may take a more direct role there, markets immediately start thinking about oil prices, inflation, global trade, military risk, and central bank policy. That is why Bitcoin came under pressure. BTC was already struggling near the low $60,000 range before the comments added another layer of uncertainty. And when uncertainty rises, risk assets usually get hit first. Crypto traders do not like geopolitical surprises. Tech investors do not like them either. And oil markets definitely do not ignore them. So this is not Bitcoin falling because something inside crypto broke. This is Bitcoin reacting to a bigger macro shock. That distinction matters. When crypto sells off because of exchange failures, hacks, or internal market panic, the story is mostly about digital assets. But when Bitcoin sells off alongside tech stocks and other risk assets, it tells you traders are reducing risk across the board. Right now, that is what seems to be happening. Investors are protecting capital instead of chasing upside. Bitcoin's key support zone is now around the $61,500 to $62,000 area. That is the line traders are watching closely. If Bitcoin can hold that range, the market may continue chopping sideways while investors wait for more clarity. But if Bitcoin breaks below that zone with strong selling volume, the next move lower could become much more serious, with traders looking toward the upper $50,000 range. 2 weeks ago, that may have sounded extreme. Now, with oil risk, geopolitical tension, and macro uncertainty all coming back at once, traders are paying attention. But there is also a bullish case. If tensions around Hormuz calm down, oil prices stabilize, and crypto regulation continues moving forward in Washington, Bitcoin could quickly reclaim the $64,000 to $65,000 area, and that could catch a lot of bearish traders off guard. Markets love to punish the crowded trade. If everyone becomes too bearish at the same time, one positive headline can create a sharp reversal. That is why this moment is so important. Bitcoin is stuck between two very different outcomes. On one side, you have geopolitical risk, possible oil disruption, inflation pressure, and traders moving risk off. On the other side, you still have long-term Bitcoin adoption, regulatory momentum, institutional interest, and the possibility that this sell-off becomes another shakeout. The problem is that Bitcoin probably needs a macro spark before confidence returns. That spark could be easing tensions in the Middle East. It could be lower oil prices. It could be cooler inflation data. It could be progress on crypto legislation. But until something changes, traders may continue treating Bitcoin like a risk asset under pressure. At the same time, some investors are looking beyond short-term Bitcoin price action and paying attention to projects building around the Bitcoin ecosystem. One project getting attention right now is Bitcoin Hyper. This is not financial advice, but Bitcoin Hyper is currently priced at $0.0136831 per token, with the next presale price increase expected in just over a day. The project is focused on expanding Bitcoin's utility with faster transactions, improved scalability, and more applications around the network. The basic idea is that Bitcoin's next chapter may not only be about holding BTC as digital gold, it may also be about building more infrastructure around Bitcoin so it can support more use cases. If you want to research Bitcoin Hyper, the link will be in the description. As always, do your own research and never invest more than you can afford to lose. So what is the takeaway? Trump's Hormuz comments just added a new macro risk to an already fragile Bitcoin market. If tensions escalate and oil markets get worse, Bitcoin could stay under pressure. If the situation cools down, BTC could reclaim key levels quickly. For now, the main level to watch is the low $62,000 support zone. Hold that, and Bitcoin still has a chance to recover. Lose it, and traders may start preparing for a deeper move. Either way, Bitcoin is no longer just trading on crypto headlines. It is trading on oil, politics, inflation, and global risk. And that makes the next move even more important.